Robschild, no investment advice. Welcome to the show where we view financial markets using Benjamin Graham's investment philosophy, macro technicals, and a touch of crystal ball gazing. Today is Wednesday, January 29th, 2025. Today's episode begins with bringing up the FOMC decision and meeting. Basically, the way I'm interpreting it as of right now, nothing to see here, folks, and the market reacted as such. If you took a look at the market, we had a little bit of a spike in the 10-year note yield in the middle of the day when it was released and quickly went down. Overall, the message was, we have nothing to say. We're not going to cut because, we're not seeing the kind of progress that we thought we were seeing before, and that's it. And the Fed funds futures didn't budge at all either. And so this was a complete nothing burger kind of day. The way I'm looking at it is we really need to see what quarter four 2024 GDP looks like. The current estimates are 2.5%. The previous quarter, the third final estimate, it's still called an estimate, I guess, was 3.1 in the end. And so it's looking lower than it was, year over year, the quarter before. But then, so these predictions can be off, but it's all I have to go off of, the 2.5%. And so, I'm sort of forced to believe that that's the most probable number that'll come out, and nobody has a crystal ball. Also, Friday, PCE data comes out that helps guide markets to say what the inflation is. Both of these reports have the potential to rock markets, or as we saw today, do not really anything at all. I mean, across charts just generally today, oil went down a little bit and nothing else reacted at all. For people like me, it's kind of boring. It's kind of like taking a stick to the market and poking it and be like, come on, do something. What a boring day. Anyway, no major updates in the daily reminders. Watch Macro Update 11025 with Dominoes in the Ball to hear me read through these extremely important reminders that tell me where I think things are going on a macro level. And with that, the crystal ball ratings and Robschild portfolio remain the same. Also watch that show to hear me walk through why I am invested the way I am. Onto the charts, looking at the CME Group Fed Watch tool, as you can see, the Fed funds futures they didn't really change. I think yesterday we had a higher chance of the cut being in May, so that, the Fed sounded slightly more hawkish than what the market was expecting yesterday, since we pushed it, all the way to June 1 month later. It's negligible, the differences in the Fed funds futures. And then equally in the S&P 500, basically flat. We have a candle completely inside of yesterday's candle. Not really reacting at all, down 0.5%. I do want to note that, we've been going fairly sideways in the S&P 500 for a while now. And whenever that happens, we're either setting up a base for a big move higher, or, the longer that this goes sideways, the bigger the breakout could potentially be. And I wonder if it's ready to break down the downside. It would make sense to me for Mr. Market to cool off a little bit here in price. I think that, things are overvalued. Again, watch the macro show to hear me walk through all that. TLT, my favorite place to be, still looking bullish to my eye, with higher high, higher low, higher high, and then being above this neckline of this head and shoulders top, holding steady above it. It clearly wants to go higher the way I see it, and it's upside down brother, TNX, the 10-year treasury note yield. It's not the exact opposite, but it's the best chart to look at to see where long rates are going, since trying to predict rates past 10 years is nearly impossible. And so although TLT is more related to the 20-year, I believe the average duration is 22 or 24 years. the name of the fund is 20 plus years. So it's the funds that the treasuries they hold have more than 20 years left on them. And then 0Z has actually a longer duration than that. That's how those work. But anyway, 10 TNX also holding the line today with the head and shoulders top. I drew these white lines to show the top of the head to the neckline and then the break. And so the expectation of this exact pattern would be to drop to a level of 4.3% in the shorter term. However, we do have some longer term trend lines that it has to fight through to get there. So it'll be interesting. I mean, the rest of the data this week has the potential to drive rates strongly in one way or the other. I suspect they'll go down. I mean, I hope they go down. I mean, I'll benefit if they go down. I think they'll go down. Again, watch the macro show to hear me explain it all. I don't have a lot of charts to show today because most charts didn't move hardly at all. And the things that were happening before are just continuing. So oil had been moving down and we had a down day. It's just like, yep, we're just continuing on our merry way going down. If yields follow oil as they pretty much always do and oil continues down, we should be able to expect yields to continue down. Again, Thursday and Friday could change things up. Last chart, SMH. I only bring up because this is not looking hopeful for bulls. We're trying it's going to take a lot of strength to get above this big red candle here. This was a powerful move to the downside. There's a lot of sellers and opening at the very top of that breaking red candle and moving down. It sort of suggests to me the stock market is ready to go down and yields are ready to go down and oil's about to go down, and that's all from me and my crystal ball. Hope you enjoyed. Thank you for watching and see you next time. Robschild.